Hello, I'm Andrew Mazzone, President of the Henry George School of Social Science. This is the last session of the course, The Causes of the Great New Depression. So I welcome you to watch a very informative show. We've done this in conjunction with Richard Duncan. We're going to show you an interview I did with Richard Duncan about this very topic. So let's proceed.
One of the most crucial things to understand about how the economy really works now in this new age of paper money is to understand that credit growth drives economic growth. That's the subject of this lecture. This chart shows the total currency in circulation in the US. Now, as I've explained before, up until 1968, it was a law that the Fed had to maintain at least 25% gold backing for all the dollars that it issued. In 1968, that law was removed. Afterwards, there was no longer any requirement for the Fed to maintain any gold backing at all for the dollars that it issued. And afterwards, the Fed was able to issue another 1 trillion paper dollars, or roughly 25 times as many paper dollars as had existed in 1968. This is a crucial date because up until this time, our monetary system was a gold-backed monetary system. And now we have a different kind of monetary system, a pure fiat monetary system. One of the most crucial elements of this change was that when the United States broke the link between dollars and gold, that removed all constraints on how much credit could be created. And afterwards, credit in the United States absolutely exploded. That's what you can see in this chart. This chart shows total credit or total debt. Now, by this, I mean all the debt in the country. Household sector debt, corporate debt, financial sector debt, and government debt. All the debt. Now, notice it first went through $1 trillion in 1964. Over the following 43 years, it expanded 50 times to $50 trillion by 2007. And that explosion of credit, it transformed our world. It has made us all much more materially prosperous than we would have been otherwise. It's created much more growth all around the world. In fact, it's ushered in the age of globalization. The danger is that credit now will not be able to continue to expand because the private sector in the United States is incapable of repaying the debt that it has already. Now notice this chart shows the ratio of debt to GDP in the US. For a long time, it was around 150% of GDP. Then, under President Reagan, the government cut taxes and increased military spending. That resulted in very large government budget deficits. And so the overall debt of the country rose to 230% of GDP. It stabilized somewhat, and then largely because of Fannie Mae and Freddie Mac borrowing and lending to the household sector and the surge in household sector debt, total debt of the country rose to 370% of GDP in 2007. Now, it's easy to understand how rapid credit growth leads economic growth or drives economic growth as long as the credit is expanding rapidly. When credit's growing very rapidly, the consumers have more money to spend. So they spend more, therefore businesses are more profitable. The businesses hire more workers, they expand their capacity, maybe build a new corporate headquarters, and they even pay more taxes. So the government has more money to spend. And all the while, asset prices inflate in an upward spiral as long as credit is expanding. The problem is the day always comes when credit can't expand any further, and that's what happened in 2007. And at that point, the economy in the US and globally went into crisis as this credit began to contract. This chart shows the year-on-year increase in total credit or total debt going back to 1952. Now, it ranges from roughly 4% growth a year up to 16% a year. But this is not adjusted for inflation. So in order to compare apples with apples, it's better to adjust this for inflation. And that's what happens in this chart. Now here you can see that adjusted for inflation, there have only been 9 years when credit grew by less than 2%. And every time that happened, there was a recession. And the recession didn't end until another big surge of credit growth occurred. So only 9 years, at least up until the time of the crisis, only 9 years between 1952 and 2007 when credit grew by less than 2%. And each time there was a recession. You can see that more clearly in this chart. The blue bar is the same, total credit growth adjusted for inflation. But now I add in a red bar, which is the GDP growth. Again, going back to 1952, there were only 9 times when credit grew by less than 2%. Every time that happened, there was a recession. And the recession didn't end until there was another very big surge of credit expansion. Now, in 1980, there was a very severe, in the early 80s, there was a very severe recession because Paul Volcker increased interest rates to a very high level to crush inflation. And that was successful but in crushing inflation, but it produced a very severe recession. And then, as I've said, President Reagan cut taxes and increased military spending, resulting in a very large budget deficit for 5 years in a row. And that budget deficit, the government's debt, caused the overall debt of the country to start growing by 8%, 10%, 12%, 12%. And that surge in debt ended this very severe recession, and it also created the prosperity of the 1980s. Okay, so let me repeat one more time. Going back to 1952, only 9 years when credit grew by less than 2%. Every time there was a recession, and the recession didn't end until we got another big surge of credit expansion. So what we've seen is that going back to World War II, credit growth has been driving economic growth. And when we don't have credit growth, we don't have economic growth. So that begs the question, what about now? Are we going to have more credit growth or are we not? Now, the easiest way to answer that is to look at the 5 big sectors of the US economy to see which one can take on more debt. And that's what I do in this chart. The top line, the blue line, represents the household sector. Household sector debt increased from $4 trillion in 1993 up to $14 trillion in 2007. And then they started defaulting on their debt. And that's when the crisis began. Now what we want to know is this going to start moving up again? Is this line going to move higher again? We need credit growth to generate economic growth. Well, it's not at all certain that this is going to move higher. For one thing, median income in the United States is dropping. You can see here that median income is now, adjusted for inflation, is roughly back to where it was in 1989. Income is dropping not only because of this severe recession, but also because globalization is pushing down wage rates in the United States as the manufacturing jobs all move overseas. And as income goes down, that means it's going to be more difficult for the household sector to bear additional debt and service the interest on the debt. So it's not, this line could very easily continue to drop, but let's say for a moment that it does begin to expand again. Well, here the problem is, if household sector debt does go back to $14 trillion, let's say 3 years from now, I just don't see why the households will be any more capable of repaying $14 trillion of debt 3 years from now than they were 3 years ago. If their debt level goes back up to that height, they'll just begin defaulting again, and this crisis will replay. So this is a major concern for the outlook for the economy. Okay, the next sector that we'll look at, the red line, that's the government sector debt. And the government debt, since this crisis started, over the last 4 years, the budget deficits have amounted to a combined $5 trillion. So this has resulted in a surge of government debt. And now what we want to know is, can the government debt go higher or not? Well, I think it could go higher. The US government debt is only 100% of GDP. Well, Japan's government debt is 250% of GDP. So that suggests that the government debt could go higher. Also, look at the yield on the 10-year government bond. It's extremely low, only 2.5%. That tells us that the market is willing to lend the government a lot more money. So there's no economic or financial reason that the government debt couldn't continue to increase. The problem here is that politics may interfere. The entire political debate in the United States now seems to be focused on how to reduce government spending and how to reduce the government budget deficit as quickly as possible. So for political reasons, this line may not be able to continue expanding and continue driving the economy as it has been doing. Had the government not increased its debt by $5 trillion over the last 4 years, there's no question that the United States and the world would have collapsed into a new Great Depression. Now next, the green line represents the debt of the corporate sector. And the corporate sector debt has been moving up, but it's uncertain how much higher it will increase, because the corporations all have a great deal of cash on their balance sheets. So they really don't need to borrow more. And furthermore, there's a great deal of excess liquidity across all industries around the world. So there's really no reason for them to borrow more and invest and build more capacity when there's already excess capacity. So it's uncertain how much higher the green line will go. The purple line represents the debt of Fannie Mae and Freddie Mac, the GSEs, the government-sponsored enterprises. And here you can see that the debt of Fannie Mae and Freddie Mac has increased from, let's say, $1 trillion 20 years ago. It went all the way up to $8 trillion. So in other words, over that 20-year period, Fannie and Freddie sold $7 trillion worth of bonds, and they obtained from that $7 trillion of cash. And with that cash, they bought up $7 trillion of mortgages. And that pushed up the US property prices to a very high level. And the higher property prices allowed the Americans to extract equity from their homes and to spend more. And as they spent more, consumption expanded, and the US began importing more and more from abroad. That allowed the rest of the world to export more and more to the United States, and that created a great global economic boom. But then in 2008, Fannie and Freddie went bankrupt and had to be taken over by the government. Now, it seems unlikely that this is going to increase very significantly anytime again soon, and could well contract. The last line that we're going to look at, this blue line, that represents the debt of those groups responsible for creating the subprime disaster, the private sector issuers of asset-backed securities, companies like Countrywide and IndyMac. Their debt went all the way up to almost $4.5 trillion, and then most of them started going bankrupt, and their debt has contracted ever since. This is unlikely to pick up again anytime soon. Okay, so that's it. We've looked at all 5 of the big sectors of the US economy, and what we've seen is that it's very uncertain that private sector debt is going to increase again anytime soon, while the government debt could go higher, but may not be able to for political reasons. So where does that leave us? Okay, you've seen this chart before. This shows the total increase in year-on-year debt adjusted for inflation. going back to 1952. The difference is this time we're projecting into the future, to 2016. Now, to project into the future, I have to make two assumptions. Because this is adjusted for inflation, I have to assume what the inflation rate's going to be. And here I'm assuming it's only going to be 1%. Now that's quite optimistic. It's not impossible, but it's an optimistic assumption. If inflation is 2 or 3%, these bars will become significantly more negative in the future. And the second assumption, I'm assuming that there's no change in private sector debt. I really think private sector debt is likely to continue to contract. But here I'm assuming that there's no increase in private sector debt and no decrease in private sector debt. So then all this really incorporates is one thing, and that's the change in the government's debt. Now we know the government debt's going to continue to increase because the government will have a big budget deficit every year going forward. The Congressional Budget Office projects out what those budget deficits will be. So I just take the Congressional Budget Office projections and plug them into my spreadsheet, and this is what we end up with. We get a situation where we have no credit growth for as far as the eye can see in the future. And this is very disturbing. It's painting a very dire outlook for the future of the US and the global economy, I fear, because nothing like this has happened since the Great Depression. Again, in the past, every time we have less than 2% credit growth, we're in recession, and the recession doesn't end until we have another surge of credit expansion. Well, that surge of credit expansion is difficult to foresee and may not occur. So, in my most recent book, The New Depression, I coined a term I call creditism. I believe the nature of our economic system has changed. Once we broke the link between dollars and gold and credit exploded, this changed the nature not only of the monetary system, but also actually our economic system. Now, the growth dynamic is entirely different than it was in the past. Under capitalism, let's say back in the 19th century, economic growth came about this way. Businessmen would invest, some of them would make a profit, they would save that profit, or in other words, accumulate capital, hence capitalism, and repeat the process. Investment, saving, investment, saving. That's how capitalism created economic growth. Well, that's not the way our economic system now has worked for decades. Under our economic system, the growth dynamic has been driven by credit creation and consumption, and more credit creation and more consumption, and that's created very rapid economic growth. In fact, much more rapid economic growth than would have occurred under capitalism. The danger is it now seems that creditism can't create any more economic growth, and in fact may collapse into depression because the private sector can't bear any more debt. So we're looking at a situation now where there's no credit growth for as far as the eye can see in the future. This hasn't happened since the Great Depression. I'm afraid these projections paint a very dire outlook for the US economy and therefore for the global economy. For this reason, quantitative easing is likely to continue for considerably longer than is generally anticipated. In my first course, Capitalism in Crisis, there's a lecture I called The Quantity Theory of Credit. And there I go into much greater detail about the importance of credit growth driving economic growth. Once we broke the link between dollars and gold, this allowed the credit supply to explode from $1 trillion in 1964 to $57 trillion now. In the past, it was the money supply that mattered, but that's no longer the case because in our world, there's no difference any longer between money and credit. Under the gold standard, if you took a dollar bill to the Treasury Department, they had to give you some gold for it in exchange. Now they just give you another paper dollar. So there's really no difference any longer between money and credit. A dollar bill is a credit instrument. But even beyond that, once we removed the constraints on how much credit could be created, and credit expanded 50-fold, this extraordinary explosion of the amount of credit, the credit supply, in other words, completely dwarfs the money supply. It makes the money supply now irrelevant. So there's no point any longer in monitoring M1, M2, M3, or any of the other monetary aggregates as economists have always done. What matters now is the credit supply. And if credit ceases to expand and starts to contract, there's a very real threat that the economy will collapse into a depression. And so the government's policy response to this crisis is built around ensuring that the credit supply continues to expand. So this is what we need to watch. Will the government and the Fed be successful in making the credit supply expand again? Because after all, in the past, going back to World War II, without at least 2% credit growth, we don't have economic growth. At this stage, we're not back to 2% credit growth. And that's why quantitative easing has been necessary to push up asset prices in order to try to stimulate growth in credit and debt. We're not there yet, and the economy is very weak. So this is something we'll have to monitor as the months and quarters pass by.
Everyone's got the kind of the schematic or the outline of what's happened here. Now it feels pretty good. We're still going out and we can buy things on the street and we can go into stores. New York City is bustling with activity. Doesn't seem to be a problem. In fact, New York property prices are going through the roof. In fact, it seems like almost everyone around the world who has any money is coming here for the grand finale. This is the place to be. I mean, you read the stories of the rest of the world suffering and contracting and so forth. He leaves essentially no way out. Wouldn't you agree? I mean, if you could just keep increasing credit, why wouldn't every country just do that for the rest of the time? And, you know, be done with it if it works forever. But it doesn't work forever. We've had a lot of circumstances, a lot of give and take. You have depression in an environment so that pumping money into it doesn't inflate prices except asset prices. Now asset prices, as we know as Georgians, when they become real speculative and people can't afford the rents to live in those speculative places, and people can't afford to pay the mortgages on those high-priced assets, eventually it all gives. And what you have is the conditions for a worldwide super collapse imposed on the temporary one they were able to buy their way out. Now this is how I see it. Maybe that's overdrawn, and maybe we can kick this down the road for another 10 or 15 years, but I doubt it. All the signs of poverty, pressure, you know, impending events, things going wrong, nothing really going right, you know, with the exception, if you read about sports franchises, fantasy leagues, NFL, you know, people who have discretionary money, wealthy people play those games. Entertainment's big, pro football is big. So there are places where money goes for entertainment, but it's not taking care of the bulk of the population anywhere. It's a small segment of the population that not feeling any pain. And of course the system is designed for that. But anyone have any comments on what does it look like from here on out? Or is it just too indeterminate? Yes?
I have a question.
Sure.
Is there any way to make it sound, how can I say, like if we did this or that, then maybe then something would get better, or this trend might be increased? I mean, it sounds so droll, and that's not the right word. It sounds so
inevitable.
Yes, and kind of deadly. So is there any way, I mean, I didn't hear like a lot of optimism in your comments.
Well, I'm just summarizing his comments, and we addressed that in a Smart Talk segment that I did with him.
Oh, I see, I'm sorry.
No, that's okay. We'll see that. But your question is well taken. What wiggle room do we have to get out of that, out of this? given the environmental issues we have on top of this, you know, it's, you can see any forward-thinking person could see that we're heading for more trouble than less trouble. I mean, that's about really all you can say. And if you're a human being and you're 50 years old, let's say, and you're working for a New York bank where things might be pretty good, and you only got 20 more years to go, you know, you might be able to.
Somebody would die at 70.
You know, but you know, he said, I got 20 good years. I mean, so it gets crazy. You know, we just get a bigger police force. You know, we just put down the, I mean, why would I change? Why would I change? And I'm a mover and policymaker. I mean, I donate to the presidential candidates. I'm going to put someone in that's not going to rattle my cage. There's no revolutionary sentiment in the American people. You don't see any people running around saying to the barricades or anything like that. I mean, you may see, you know, ghettos like Ferguson, people who have no jobs, no hope, who might be howling about. But essentially, it's almost going to play itself out until it can't play itself out. Just like 2008, all of a sudden, kaboom. But they had the ability to get out from under it. And I had a big debate, a smart talk debate with one of the best economists in the world named Mark Blythe, who took me to school for saying these trends are all going to converge to something bad. He goes, look, to answer your question, humans have been forecasting gloom and end of times since the beginning of time, and somehow they muddle through. In other words, he said, you know, I've been hearing these stories forever. And I said, but Mark, you know, yes, you could hear those stories up until the Industrial Revolution where, you know, the planet was self-renewing. But now you have enormous technology trying to maintain that, just crushing into a finite environment. And maybe you can't predict disaster. Maybe you can't depict to the point where it becomes tougher, where people start going at each other. You know, and maybe going at each other with wars to preempt a final problem from really emerging. You know, so that you've almost, if I went down to a big investment banking hedge fund company, I walked in to talk to the people in there and I said, look, here are the trends. Do you understand this? They'd probably say, of course we do. Well, what do you think we can do about it? Not a hell of a lot. Because, you know, this is all entrenched and structured over many years, many decades, many centuries. And if it was a dead end and we don't have any wiggle room, I'm doing pretty good anyway. So I'm going to try to max out my game. Maybe I'll fly to a hideaway if it blows up. And, you know, if I've had 50 good years of life on top of the world, and maybe I can get another 20, and I'm going to be in my 70s, where, you know, I'm not 20, maybe that's the best I can hope for. I mean, you take a look at the presidential candidates that are running all over the lot. None of them are going to be able to solve anything, really. They can't solve anything. You know, look at Obama, who was the great hope. You know, basically got the support of the big guys in 2008 when things were collapsing, because he looked like the people saw him as someone that might do something. He couldn't do anything, essentially. As soon as he came in, the banks collapsed. He brought the same old gang, the same thing, bailed everybody out, and basically lost his credibility right there. Now he's running around, you know, and singing Amazing Grace in black churches, and, you know, wanting to make agreements and this and that, try to, you know, salvage a reputation. But nothing's really changed. And of course, we're in New York, which is the empire city of the world. This is all the money comes here. You're not feeling any pain in New York if you're part of the New York scene. You know, go 50 miles outside New York, maybe it's a different thing. But then you'd say, well, we're New Yorkers, we're smart people, those people are idiots. So if they were like us, they could come here and it's all good, until it isn't. So, is there any way to unravel this? Well, as a Georgist, I think there is. I mean, you know, I'm a believer in not allowing nature to be used for profit, the rents should be taxed, and then business and working people shouldn't have to pay taxes. And you would probably relieve the credit creation based on land, natural resources from blowing up so great, and you'd probably be able to contain a lot of this. But then again, if you stop that, all the big money people would have a lot less fun, and they're the ones that control things, you know? I mean, let's put it this way. If you were the French King Louis XV, just before the Revolution, and Louis knew years before it was Zen that there was trouble afoot. In other words, one day they just all of a sudden didn't run to the gates of his palace and say, you know, off with your head. There was all kinds of stuff going on. There's all kinds of middle class uprising. It was a new day. You know, people weren't believing in religion so much. All the props to maintain an old way of life were going. Did the French king do anything to stop this, even when he could see it coming? No, he simply said, after me the deluge. He lived his way until he couldn't. And I would say that most people would do that. So I think that's the kind of thing you're up against. What party, what candidate, what people, what persons in this country are acting as if something's really wrong? You tell me. Yet if you take this guy at his word and his facts are right, I mean, we're in a precarious situation in terms of the kind of standard of living we have and had, and how it's not going to be really sustainable the same way unless you can hope for a miracle of some, you know, maybe there's a God in another planet who'll come down and just fix everything. You know, it's possible that you can just sit here and next thing you know, these wonderful beings come down and they have all kinds of cash and they have seeds that can grow, one seed can grow 10 million ears of corn, and you know, a couple of mist-sprays in the environment and all the pollution goes away. You know, maybe there's some magical solutions. And that, you know, and I think many Americans, if you said to them, don't you think that even though the trends are bad, that somehow we're going to figure our way out, because we always have. Don't you think that would be an American?
Yes.
And think about why that would be the case. Because American history is unique among all peoples in the last 200 years. They land on a piece of land 200 years ago, 250. It's not really inhabited thickly by anybody. They go to the East Coast. They transplant European civilization, but they have one advantage. They can't be pushed down on wages, and they can't be pushed up in rents because they simply can move west. Move west. Have an open frontier and a beautiful continent. Therefore, Americans were never trapped for 200 years. So there was always a way out. The planet wasn't being despoiled because you were really not into the Industrial Revolution deeply at that time. So American history is always one of there was always a solution to problems because you could simply move west. And that kind of relieved the pressure. So that's a 200-year solution embedded in the psyche of American people. Why wouldn't they think there's a magical solution? And then when the frontier closed, the rest of the world went to war, World War I and World War II, and the only people that had any resources and couldn't be bombed or affected was the United States, protected by two oceans, and we simply sold everybody around the world all the means to blow themselves up. And so there was more jobs for Americans for that period between 1900 and 1945. And the problems only started from 1945 on, where America is now just like the rest of the world. But Americans don't think like the rest of the world, and America is still the head of the industrial empire of the world, simply because of its privileged position for 200 years before that.
But
go ahead.
We still have some advantage in that we have a bigger continent and we're
True.
newer, and so supposedly we have more resources. Maybe we don't.
Well, no, I mean, I think that's confirmed by the fact that who's coming here? All foreigners coming to New York. You don't see New Yorkers run into foreign countries.
Yeah.
So there's evidence for that. This is probably still the last great piece of land with structure and so forth on it. So everyone around the world would come here if they had any brains. But you know, it's, so yes, I think there's room for, but if the rest of the planet's really getting hammered, you know, this is really a last stand situation. New York is the last stand city. And it'll go down partying much like Pompeii did, you know.
Well, when you said about Louis, that's the time of just viability, right?
Yeah, that's correct.
Internet and all that stuff.
Yeah.
So, I mean, they sort of did what you said. They just lived very high and ignored everything.
Absolutely.
All of a sudden, everything just...
Yeah, but you're 70 years old, like he was. All right, so you're going to kill me. Look at the lifestyle I have. Look at the lifestyle you have. So you're going to kill me, cut my head off one side, it's over in seconds. But I had a great life. Why should I give this up for you? I have the power, why should I do it? And live like you guys, you know, and change a position that I know is good. So, I mean, the logic for people who have it is not to change it, even if they could see the end coming.
Okay, one more thing. I know I'm talking too much.
No, go ahead. No, I'm glad here. I'm loving it.
I just wanted to ask you, though, if you were writing a book and you wanted to say, for instance, how to avoid the next Great Depression or something like that. Let's say you call it that because that's telling people, oh, well, there's actually something you can do about this. Well, do you think there is?
Well, of course I think there is. If there weren't anything called elites, people who are very smart and very tough, who basically, because of their abilities, get to the top of whatever structure is invented. And they're not going to dig themselves out and go back to normal if they can't. But if you wanted to fix this system very quickly, you could, by taxing land and monopolies on nature and use that to run a government. And then there wouldn't be enough juice to speculate on. You'd have to then make it on your labor and your creativity in business. And aside from the environmental problems, which are a separate issue, there would be very little of this kind of speculation. But you can't make any big money with that kind of a thing, to be more of an equal distribution of income, even though there would be, you know, a smart, wealthy person would make 10 times instead of 5,000 times. So it'd be a lot less pressure on the system. But again, why would Warren Buffett want to give up what he's got? He'll say to you, look, I made this fair and square, which I didn't break any laws. Of course, the laws were constructed to have this very effect for smart guys like him. And he'll say, I say, well, Warren, you're just smarter. You and your gang are just smarter than everybody else. He says, not my fault. I didn't press the smart button to come in here. You know, I mean, you know, that's another problem. And smart people tend to go to the same universities and marry each other, and click with each other, and hang out with each other. Why would they give up those privileges? You know, you just got to understand that the French King Louis, I'm sure if he had a good advisor, every day, for an hour a day, he would have been handing out loaves of bread instead of cake to people, if he had half a brain, okay? He'd be giving you know, to one of the French peasants, a free trip to Albania every week as first prize. And second prize, he'd give out 2 trips to Albania to a peasant. So, to relieve the impending pressure. So, what you can tell with America, income hasn't gone up. There are a lot of objective things to say that if technology is improved, why can't an ordinary American do as well as he did before when the ingredients for technology and everything are better? How do you explain that? All right, well, those are the things that give you the tip-off, you know. Now, I can understand Warren Buffett. Well, in fact, there was an article in the Times this week, I think if you read it, 2 famous people, Paul Tudor Jones, a hedge fund manager, and Ken Langone, you see his name on NYU, were saying, and they had a nice article, we're concerned about income inequality. Why were they concerned about income inequality? Because they say history says there could be a revolution And there could be 80% tax rates. And we don't want capitalism to be destroyed by crazy stuff like that. So maybe we should change things somehow. Of course, they didn't say how, other than to say, let's not have such bad income distribution. In other words, we agree we shouldn't have bad income distribution. But that's all as far as it got, you know. So there you go. They're not bad people. And they're not bad people. Ken Langone, Warren Buffett, they didn't get a ticket from heaven that said, do you want to be evil? Do you want to kill people? Do you want to exploit people? No. It's part of the structure of humanity when you allow people to claim public property and privatize it. And structural things like that create these long-term problems. And someone who's very, very quick-witted and understands that is going to say, hey, okay, this is an advantage for me because I know how to take advantage of this. Well, what about everybody else? Well, I can't worry about everybody else. Everyone else is supposed to take care of themselves. And you have the final argument. There's no revolution in Haiti, and they're pretty well bad off, right? You wouldn't want to live in Haiti, right? Any revolution in Haiti? So people will take almost anything as long as they can eat. So as far as changing things, American people have stood still for halving of their, dropping, relatively speaking, of their standard of living. None of your friends they may be complaining about, geez, I wish things were a little better, but they're not doing anything more about that. They're going to vote for Hillary Clinton in the election. They're going to vote for someone who basically made $500 million strong-arming people over the world to donate to the foundation so that they have a nice little fortune and they'll sell a little influence. American people know that. American people are still going to vote for her. So what are you going to do? How are you going to change that? Right? The only one who's actually shaking things up is Donald Trump, because he's just having fun shooting the whole place up like a Wild West guy. That's all, you know? But in your lifetime, who was president made no difference. In your lifetime. Didn't make any difference to you. Think about it. Did it make any difference to you? Could you tell from one president to another? You personally. Was anyone following you in your personal life 10 years ago, 5 years ago? Nobody worries about what you're doing personally, right? Nobody. It's not a secret police. So you say, well, we have certain freedom. Of course you have certain freedom because you have no ability to do anything serious. So unlike the Russians who had to watch everybody else because they thought individuals could do everything, the American people, elites, are very smart. Let them go. Let them all get in the internet. Let them all talk. They're not going to do anything. They don't know how to do anything. So you have perfect freedom. Do what you want. Except
this isn't me, of course, but movie stars.
Well, what are movie stars doing?
Movie stars, well, I feel like do whatever they want.
Well, they got more money to do whatever they want. That's all.
But they don't care about the fact that some of the things they do are perhaps a little bit illegal, or maybe, I mean, I think they just try to make money however they want because they'll just get out of it.
Well, we can document individual cases of this and that. The real question is, assume the life of a nation is important. Assuming people are important, not just a small segment. Now, you can make a case, and the elites will make the case. Look, yeah, I understand all this equality business. I get that. But you know, when you went to school and when I went to school, one of the first things you've seen in your lifetime is as soon as you showed any signs of intelligence, you were put in a special class, right? You had AP advanced classes, and then you had the poor people who weren't advanced. You know, they were going to take shop. And so all of this kind of thing starts to multiply. Then they recognize each other. They go with each other. They go to elite schools. You know, that's the compound with a whole set of interests. So you don't have an egalitarian thing. You have separation by intelligence. Almost right away. And in fact, in New York City, see if you agree with me or not, the greatest fear of a educated New York City couple live in the city, so you assume a certain income and lifestyle, certain amount of ability and so forth, right? You know, hip New York couples, they have a child. Their child has to be smart, because God help it, if they have an ordinary child that's not too bright, when all their friends are having real bright kids, they're going to be PhDs and PhDs squared. You ever heard them talk about their kids, if they're not a PhD or doctor or going to marry one, it's a failure. I mean, it's got 10 years from now, if you have a kid in New York City and the kid is average, you're going to shoot him. Boom. Because, I'm exaggerating. Because it's frenetic. And why is it like that? Am I exaggerating?
Yes. A little.
Okay, go ahead.
But only a little.
Okay, go ahead.
We work with kids who are homeless and disabled, and what's worse is the ones like the two cases I give out right off the bat. One of them, both parents are lawyers, mom's a politician in the city government. They have a kid with Down syndrome. Another one, the father's a surgeon at Columbia Presbyterian, married to a diamond merchant, and they have a kid with a genetic disorder. So for them, because they are wealthy, they think their genes are great, blah, 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 they wait until their 40s to have kids. The kids that are disabled, it's like the worst tragedy. And they pour millions to fix the kid, because they got to fix the kid, but the kid isn't fixable.
Well,
But the thing is, they expected their children to go to Harvard, and the kids are...
Why was that important?
Because it's an extension of them and their success, and they're elitists, and they figure, of course...
Well, why not, let's say, why not have average, healthy kids? What's wrong with that?
Because
New Yorkers?
Perfect kids, not even average kids.
Because they know that those average kids can't get any real jobs now.
Well, and also a lot of them only have one or two children anyway, and they expect their children to take over the family name and the family business. And
but why is it so
why
is it so important that why can't they just be ordinary kids?
Well, part of it because they're either in Stuyvesant or they're in Brandon.
Why do they have to be there? Why can't they be in Aeronautical Tech High School?
Because they don't even have aeronautical tech high school.
What's wrong with that, you know?
Because they got rid of it. Because they're either really good schools, like Stuyvesant, where they have 35,000 applicants for 750 spots, or they have a local one where anybody can go, and their average SAT scores when they get out is about 400.
So what's wrong with that? I mean, all people are created equal, right?
God may love them equally, that sense, but he didn't create them with equal talent. So.
But when equal talents become a situation where they can get it all and everybody else can't, then what kind of society do you have? Do you just keep the elites and say the rest are just useless eaters? That's a good strategy, except for one thing. Let's carry that to an extreme. We could use Mexico as a model. Elites kind of would run Mexico. But there's a tremendous amount of drug running with ordinary Mexican kids who will kill you rather than look at you, because they know they have no life unless they take a shot at running drugs. And therefore, all your elite education, everything means nothing when you're coming up against people who have nothing, who are desperate, and that'll happen in New York. When it gets to the point where these people, all the elites have it, and everybody else, which will be 95% of the remaining population, doesn't, it's not going to stand. If I'm not worth anything, if I can't compete because I was not smart like those persons, I could put a bullet in you and waste all your energy, all your talent, and you shoot me, you shot nothing. So they're going to have to come to a conclusion that everyone's worth something, or else you just are going to have savagery loose. Being smarter and luckier and making that a decisive advantage over everybody else is okay in a world where there's plenty to go around. There's no environmental constraints. You know, Robin Hood's day. get away with it. King Richard the Lionhearted, get away with it. The world's not going to come to an end. There's no pollution. It's not that thickly settled. You can't nuke anybody. So you can maintain, income inequality, but it's not going to be super dangerous. But even then, maybe it took a few hundred years, and they overthrew these people. But then they put something else slicker in, So the point is, the planet's going to have to come to a conclusion about how to deal with this kind of problem, or just let it rip and let the species blow itself apart in one grand finale. Go ahead.
Okay, you keep talking about people being 50, 70, okay. So we had our time. Great. So now we have kids who are 20, 30. The world's going to explode. There's no place to go.
Well, there's no sense. There's no necessarily. That may not be the case because, as Mark Blythe told me in an interview, the world's been coming to an end for thousands of years. Stop it. Okay? So that would be the
world's not.
Let's not worry about that problem. Number two. Number two, the American answer would be, we made it. Our kids can figure it out.
No, we live in America.
Okay.
I'm in America. You're in America. Okay? It's not the same. Would you agree?
The same as well.
As it was when we were growing up. Do you have the same opportunities you think for your kids today? Anyway, okay.
I don't have any kids. I can't.
Okay, well, I have 4. Okay? And they're not brilliant, and they were raised in New York City.
And they had a great.
They're not brilliant.
And they had a great start from you, though.
That doesn't, but they weren't brilliant. They're not brilliant. And they have issues. So all the kids today, I don't care if they are brilliant or not, there's issues in New York. And I think that something, it's a global world thing. It's not just New York City. You can't just keep moving. Do nothing with the elites. It doesn't work.
Well, that's to be seen. That's the whole point here. That's a good point. George wrote in a different time where currency was gold-backed and you couldn't inflate it like you do here. So it's a government monopoly, the ability to inflate currency. In a way, it's another way to take money from you with sleight of hand. So as a good Georgian, you'd have to tax. If the government's creating credit, you'd have to say what part of it is really useful and what part of it's going to the banks and allowing them to speculate in the stock market because you created this little bonanza for them. So you would add this to the part of the tax that was really unearned, and since you can't speculate on mortgages and everything that started this whole thing, the chances are you'd keep this into a very narrow, unconstrained blow-up. You would not have that, in my opinion.
It wouldn't be as harsh, but there would still be an element of harshness.
I suppose.
Okay. Second, you talked about how the wealthy and the smart guys always manage to ride it out.
Well, okay, stop. In your reading of history, every time you open a history book, no matter what era, there was always elites, correct? Is that true? Now, were these elite dumb people or smart people, generally speaking, intuitively?
Generally smart.
Well, why can't elites be dumb? And everyone else smart.
Because
why?
The elite.
Come on, stop. Why can't it be that the elites can be dumb and everyone else be smart? Why are you finding that hard to accept?
No, they could be if what makes them elite or what is valued, they don't need intelligence to do.
What world, what planet have you ever seen that on?
Vikings.
Let's see. Well, even,
I mean,
for instance, you're talking about the one with the turnips. I mean, if it's a nation that's starving and the person who has the food is the one that's valued, then...
the guy who has the two, I'm King Richard the Lionhearted. You're on my turnip patch. I'm King Richard the Lionhearted because I'm smart and tough. If I was a village idiot, you'd be there. Right? You think that as a peasant, you could walk up to King Richard Lionhearted and say, look, how about let's play checkers for the whole kingdom? It's a sporting event and you will love it. And I'll just give this up. I got nothing to offer you other than this thrill of this game. If he was an idiot, he'd play checkers with me and lose the kingdom. But that's not going to happen.
So
what do you think?
The elite being super intelligent.
I'm not saying they're super intelligent.
Or just a little above average. The elite class will still be there. Now I take it a step aside and I say, you mentioned Mazzone, the NYU guy?
Yep.
And the Warren Buffetts. All those guys are among the elite.
True.
Now,
Are they dumb or smart?
hold it, they're relatively smart. Now, when the time of turbulence comes, they are insured, now this is where I want a yes or no, and if it's a yes, explain. They've ensured the continuance by offshore banking.
I don't want to talk about
No,
the
but-
tactics of today. The
That's
question
how
is,
you maintain-
the question is, how do you put a society in check and still allow these people to be able to make extra money because of their extra ability without tipping the place upside down? Obviously, a brain surgeon and a garbage man can't make the same amount of money. You say, well, why can't they? In a communist world, to each for his needs, and from each according to their ability to create. But a brain surgeon who's not going to be able to get any more than a garbage man is simply going to shut down and act like a garbage man, and he'll just, collect garbage, and with his spare time he'll do a million other things to figure it out. So that will always be the case. Nobody's going to get the same as everybody else.
So Georgism brings us closer to capitalism versus creditism. Good. Now, for
There's nothing wrong with capitalism if it's competitive,
right, and it eliminates the credit aspect, brings it all back to normalcy.
I would say.
For instance, my father, the cop, made X. His uncle, the guy in charge of the National Lead Corporation, was making 10 times that. There was a the multiplier of only 10.
Who is smarter, your father or him?
I'd say him, the other guy.
Really? Why? How do you know? Why would they? The Constitution says all people are created equal.
You say equal opportunity?
Okay.
Equal opportunity, right? But the thing is, back in the 60s, there was a discrepancy between the common guy. The multiplier was only a factor.
Only because regulation and restraints were put on the unbridled aspects of capitalism simply because there was a depression and there was a communist country, Russia, that no one knew the pitfalls of communism, and it looked like an alternate model, and the elite class here were afraid that people would opt for that. So they had to give ground. If it wasn't for that, they wouldn't have given ground. Take a look at the people in Ferguson who have nothing, no jobs, and they're rioting. You don't see anyone giving any ground to those people because they can't do anything. But if the Ferguson people had nuclear weapons, you'd be seeing some real scholarships to Harvard there, boy.
But ultimately, the Ferguson people will, through whatever means, you say, when Louis in Versailles had it all taken from him, it's the Ferguson type of people that took it from him, right?
Well,
Ferguson people will do something.
look. I always give the example, which is not necessarily a great example. But you take a rich kid in New York, kid who comes from privilege. He's not going to get into gang fights. He's not going to go into, silly fights over turf. You crossed my street. You did it. You don't see those people doing that, right? You go to the ghetto where the kids have nothing to lose. You cross their turf, you cross their street, they're going to fight. They have nothing to lose, but their dignity. They're not going to let their dignity be lost.
Well, that could have their life.
What?
And somebody could kill them.
Yeah, but a rich person is saying, he's more cautious because he's saying, I can see a future for me. The kid in the ghetto can't see that kind of future unless he's an athlete. Any comments?
I still want to go back to the changing world of someone 20, 30 years old, and the whole thing, the whole United States today doesn't have any place to go. You have technology. I think that the younger people do realize that there's something wrong and something is wrong.
Maybe. What are they doing about it?
But this is the issue.
What are they doing?
I don't think they know what to do. What is it? I don't think they know.
Well, of course, that's a problem.
But that is-
If they were all Warren Buffetts, you could be sure they would know what to do.
No, they wouldn't, because Warren Buffett only takes care of Warren Buffett.
But let's assume all of a sudden we were able to feed everybody a pill in mid-America, the Warren Buffett smart pill. And they took the smart pill and they became Warren Buffett smart. Do you think you'd have to do anything for those people?
I don't know if Warren Buffett with smart would be all over the world and be able to be a creative world if he had to start all over at 20. Today is different than when Warren Buffett started. And you know it.
I'd give Warren the benefit of the doubt here. I think he's an extraordinary guy.
Doesn't mean that if he had to start today, he could do the same as you.
I agree. In general, and it's not me saying this, there are many studies coming out saying that the ability to go from one class to another in the United States is a lot less than in Europe, for example. And that wasn't the case 50 years ago.
I'm asking and I'm saying that this is happening and it's getting more polarized between the haves and the have-nots, and the have-nots are growing more. And I think that there is something stirring, and I do think...
Okay, but the solution, and why I'm a Georgist,
and I'm saying she's...
why is because if you change the structure in a simple way, not allowing profits to be made on nature, that very simple thing would shrink all the excess down very nicely and make it more manageable. I'm not saying it's the total solution, but it would change the structure enough so that it would be much more manageable than it is now.
My question...
That's my belief. Well, you have very wealthy, take a look at all the Chinese and African people who come in here and buying properties. So you can't say that...
What is the percentage?
Well, it's a small percentage. But they're the percentage that counts. They're the ones that get into the newspapers. They're the ones who are the beautiful people. They're the ones that are extolled in the newspapers. You don't see anything about how great it would be to be a Chinese peasant. You see...
You see that's happening to the Chinese peasant.
All right, but you see Jack Ma, head of Alibaba, you know, tooling around in New York, and he's a cool China guy, you know? So, right?
The point being is that the have-nots are growing more than the haves. And yes, they're coming over here. What's going to happen even with the buildings here where they lost all the deposits on these apartments?
Yeah. Well,
You feel better.
no good things can come of it. That's why I'm preaching to head this off in the past. But I can understand a smart investment banker saying, "Look, Mazzone, you idiot. You don't think we read the same books you read? You don't think I know what you know? Look I work for the smartest investment banks in the world, hedge funds. We make money just by showing up, turning our computers loose in the stock markets and skinning points and outwitting traders and everything all day long. We've read all the books. We get it. We just don't think we can do anything about this, and nor will we."
Nor will be is the issue. Not panic. But if you have...
Now, of course, I'm sure there's a hedge fund operator who makes a few $1 million. He says this is all disgusting. He goes to monk school to relieve his guilt. Yes, you're going to see...
I agree with that.
Yeah.
Because if somebody has enough money, they're going to realize,
Yeah.
well, this isn't really making me happy.
Yeah.
I'm going to do what I want.
Exactly. But that's not a big enough proportion of people to make a difference. Did you believe the College Board scores of a Harvard kid are lower than the College Board scores of the University of Michigan?
No, but I believe the Harvard schools' parents have connections. They went to Harvard.
It's not all 100% that way.
But a lot of it is.
But I can assure you that the College Board scores of Harvard are probably the highest in the country. However the kids got in there. Would anyone want to refute that?
So do you believe then that there was some cheating going on or not?
I don't know. I'm just telling you.
That's not though an indicator it's not an indicator that says something. It's just like a statistical methodology.
But they work toward that statistic.
Right. So it's a self-fulfilling prophecy.
That may be. Yanni's got an interesting take. Yanni's basically saying it's an environmental issue that ultimately culminates in that differential. But what difference does it make if the people can some people can create that environmental goodness as opposed to others. It comes to the same thing.
Yeah, but the environment is not contingent on the institution. Like the environment that will create, the most successful businessmen, they've been dropouts. So that actually speaks against.
Well, that's anecdotal. If you take some of the studies and you go look it up, where they've taken people who've taken college board exams, which is a proxy for something, 40 years ago, before they actually went to college, and then they followed them 40 years later, and they tested what the average income was for those million kids. And it was invariably almost a perfect correlation. The better you did on college boards exams 40 years ago, the higher your income was. So yes, there's always exceptions to that. But the general population, the correlation, there was some variability, was almost perfect.
Right, but this is kind of like the self-fulfilling prophecy, because I hire in the higher echelons, in the executive class, people, not because of their merit, but because they carry a paperwork which basically says they are on the same network as I am. So it's
We're talking about people who took college boards exams before they went to college. And then their income was tested 40 years later, regardless of the circumstances. The results were the people who had the highest college boards exams just happened to have the highest income.
But the admissions on the colleges is predicated on the college board exams. Not
True.
all of them are going to go to college. You have dropouts and stuff, but I agree with you, these are like the marks, but the fact that you have the Bill Gates of the world proves you that it's
only
not
Bill Gates.
educational product that matters, but actually the network. So the fact that you have the outliers proves that it's not, there's no robust educational product that Harvard or Columbia or the Ivy League or what have you, the Oxford, the Cambridge, sell you. They don't make their money on the educational product they sell, but it's on the network.
That may be. That may be.
The network
That may be. That may be, but the college boards are used to allow you to get into the good network schools.
Right.
Right, but it's not meritocracy. I mean, I agree, it's kind of like a good old boys club.
Okay.
It's not
All
meritocracy.
right, go ahead. Go ahead.
As you were saying, and you were saying before, if you have, even as a little kid, if you have good grades and good scores, they put you in a good class.
Right.
And then you always have not only them pushing you to excel,
True.
but you have the other bright kids who are, as we were talking before, when we were in college, we talked about ideas. Nowadays, I don't know what they talk about in college. I don't even know if they talk to each other anymore. They're texting. But you have those ideas flowing around you, and the creativity and the intelligence, and then, as he said, that creates a network. But as you go along and you've been with those group, you just stay again with those bright people. So as you said, the elite tend to be the bright ones, and they're the bright ones. So you have.
And they don't have egalitarian tendencies, except when you read in the New York Times, when two of them, Paul Tudor Jones and Ken Langone, going, I'm shocked to find out there's income inequality. And not that that's so bad for them, but then they immediately follow that with, that usually means revolution or high taxes like Piketty said, 80%. That's not good. Not good for who?
Well, they don't want a revolution, so.
Why would they care? Why would there be a revolution? What are they worried about?
They don't want to lose anything they have, but they want to keep the system going and they keep creating the illusion that other people are getting from it.
Anyway, I don't want to beat any more questions. I don't want to beat it to death. I mean, you draw your own conclusions. You see the numbers. You know what life's about. One of the things I'll leave you with before we see my talk with Duncan, that kind of sums up everything. I think you'll find that fairly interesting. Is that one of the big problems with Americans, I think, one of the biggest, and I won't talk about intelligence here. I would say gullibility is a big problem with America. Americans simply are very trusting people. their history would be one of can do, move west, get it done. Deception is not part of the American character. Positive thinking is part of the American character. And if times have changed on them, they wouldn't look for conspiracies or evil. They wouldn't look for a Hillary Clinton, Bill Clinton type deviousness. They just wouldn't be looking for that. So they're they're open for that kind of a mentality. They're used to Andrew Jackson, straightforward, straight shooting kind of guys, usually. To put in onto the American people who are tricky, dissemblers, are smart enough to parse the sentences they say and what they don't say, is very difficult for Americans to see through that. And it's proven by the simple poll that was taken recently, which I mentioned. 57% of the American people do not trust Hillary Clinton. They think there's something fundamentally dishonest about her, whatever it is. But yet 3/4 of those 57% are going to vote for her. If that's not naive, what is it? You can't do much with people like that. If people like that get in trouble and they lose what they have, you can understand why. You're going to vote for a person who's a trickster. How bad is that?
Well, maybe they don't have anybody opposed to that person to vote for that would be interesting to them either.
Well, there's 20 people running for president.
Yeah, but they only vote for the Republicans or the Democrats.
Yeah, well, anyway, I don't want to get crazy. I don't want to get crazy here. But Europeans are a little different. European history is a little different than American history.
Very violent, which is what I was thinking. Is it because we haven't been through a war that they've never moved?
Well, we had an open frontier for two. Yeah. Yeah, but we haven't had. We have had 200 years. We've had 200 years of open frontiers. Go to Greece, Yanni. Go to Greece and take a look at Greece histories for the last 2,000 years. There's no illusions with Greeks. There's no open frontiers in Greece. They dealt with the worst of the worst. There's no Greek is got the same la-la mentality as an American. He knows better. He's seen this act before. And what they've done to the Greek people is said, okay, we know you see through it. You voted to tell us you don't want any more. We're just going to stomp you out. We're not going to even make even a pretense of discussion. Now, America hasn't come to that point. They can still get the vote from people like Hillary Clinton, and they can painlessly get the job done. The Greeks can't be fooled. The Greeks said no. And they said, we don't care what you say. Bam. The Germans won the war. The one they lost, they just won it. Right? What are you going to do? A proud nation in front of the whole world votes for a change at great risk. Bam. Shut them right down. Put them out of business. Shut the banks down. But those Greeks know better. And one day, those Greeks will be heard from again. You could be sure. Anyway, let's look at
The Austrian economist believed that credit creates an artificial boom, and that the boom lasts so long as credit continues to expand. However, they also believe that the day always comes when credit can't expand any further, and then at that point, that the depression begins. The government's policy response to this crisis has been designed to ensure that credit never ceases to expand, so that the day of reckoning never arrives. Once that's understood, it's possible to anticipate what the government will do next. And that's important, particularly for investors, because government policy has now become the most important driver of asset prices. The government's policy response to the crisis was made up of three elements: saving the financial system, massive fiscal stimulus, and massive monetary stimulus. First, consider the steps taken to save the financial system. There were 5 categories of measures. The first was nationalization. Fannie Mae and Freddie Mac were put into conservatorship, and the government took equity stakes in AIG, a 79% equity stake, and a 34% stake in Citi, and a 6% stake in Bank of America. On top of that, the government also invested another $170 billion in a further 650 smaller banks. Second, the Federal Reserve lent hundreds of billions of dollars to the banks. And third, the Fed bought more than $1 trillion of assets from the banks. Then fourth, there were debt guarantees. The Fed, the Treasury Department, and the FDIC combined guaranteed trillions of dollars of financial sector debt. And finally, fifth, there was forbearance. Accounting and regulatory standards were relaxed. Now consider the massive fiscal stimulus. Between 2008 and 2012, the government ran unprecedented budget deficits. In 2008, the budget deficit was $460 billion. It then increased to 1.4 trillion, 1.3 trillion, 1.3 trillion, and last year 1.1 trillion. As a percentage of GDP, that peaked at 10% of GDP in 2009, and even last year, it still amounted to 7% of GDP. So over the last 5 years, the government has accumulated $5.5 trillion in budget deficits, and through that deficit spending, stimulated the economy. Next, there's also been massive monetary stimulus. First, the Fed cut short-term interest rates to 0, and then when its traditional policy tools were exhausted, it launched what has become known as quantitative easing. In the first round of quantitative easing, the Fed created $1.75 trillion. In the second round, it created $600 billion. And in the third round, which was announced in September 2012 and is still ongoing, the Fed has been creating $85 billion a month. And it's told us that it's going to continue creating $85 billion a month until the unemployment rate comes down substantially. In other words, it's going to continue until it works. So how does QE work? Well, first of all, quantitative easing is a euphemism for creating money from thin air. The Fed uses the money it creates to buy assets. It buys mortgage-backed securities issued or guaranteed by Fannie Mae and Freddie Mac, and it also buys U.S. government bonds. So how does that help the economy? First, QE pushes up the stock market, and that creates a wealth effect that boosts spending. Second, when the Fed buys government bonds, it pushes up their price, which pushes down their yield. And that's allowed the government to finance its massive budget deficits at very low interest rates. And the government spending props up the economy. Third, when the Fed buys mortgage-backed securities, it pushes down mortgage rates, and that supports the housing market. Fourth, when the Fed buys assets from the financial sector, it reduces the sector's leverage. And fifth, it also pushes up the value of similar assets on the bank's books. That further improves the sector's solvency. Milton Friedman taught Ben Bernanke that the Fed could have prevented the Great Depression if it had prevented the money supply from contracting in the early 1930s. Now that there's no longer any difference between money and credit, Bernanke understands that he must prevent the credit supply from contracting. And that's what the policy response is designed to do. It's designed to prevent the total credit supply from contracting. You can see in this chart, the blue line represents total credit in the United States. We've seen that increase from $1 trillion in 1964 to $50 trillion in 2007. Now the red line shows what total credit would have looked like without government debt. And here in particular, notice that when the crisis started, without the $5.5 trillion of budget deficits over the last several years, the red line, total credit, would have contracted very substantially. And moreover, it wouldn't have flattened out as it's done here in this red line. Without the government intervention, the banking system would have failed, and all the credit in the country would have been destroyed, and the red line would have spiraled downward, and we would have collapsed into a new Great Depression. But with the increase in the government's budget deficits, the blue line continued to increase with only a couple of quarters of decline. Now consider the impact that quantitative easing has had on total credit. And that is what you can see in the green line. When quantitative easing is added into the total credit number, you can see there was really no dip whatsoever. Total credits continued to expand without interruption. And that's prevented the economy from collapsing into depression. And that has been the goal of the policymakers, to ensure that this line continues to expand without interruption. And that's what they intend to continue doing. So the policy response to this crisis has been global. The European Central Bank, the Bank of England, and the Bank of Japan have all printed extraordinarily large amounts of money. China has allowed total bank loans in China to grow by 60% in the first 24 months after the crisis started. The International Monetary Fund expanded the number of special drawing rights by 10 times. That effectively resulted in the creation of the equivalent of almost $300 billion of IMF money in 2009. And finally, total foreign exchange reserves have increased by almost $4 trillion, or by 55% over the past 4 years. This is the greatest government intervention in the economy ever recorded during peacetime.
Welcome to Smart Talk. On this program, we hold discussions with leading economists and social scientists from around the world. There are no rules about what topics are brought to the table. The outcome is always interesting. Joining us today via Skype from Nashville is Richard Duncan. He's the author of several books, including The New Depression, which explains why the global recession is in danger of becoming another Great Depression. I'm Andrew Mazzone, president of the Henry George School of Social Science, and this is Smart Talk. How are you, Richard? Nice to have you on the show.
Thank you. I'm well. Thank you for having me.
Yeah, well, first of all, I have to let everybody know that we're such big fans of Richard Duncan that we use his material extensively in our coursework now. And the reason being, you could read 200 books on what has gone on in the last 30 or 40 years. And if you want the most concise, accurate description of what went on, you just read Richard's books, especially the New Depression book. But my question to Richard is going to be this. Before we describe a cursory outline of what happened from 45 to the present, I wanted to ask your opinion if you think this was all serendipity or there was planning to accomplish all the things that occurred. For example, the credit creation and all of that. In other words, was there a geopolitical method to all this madness, or was this simply happenstance that credit became the new paradigm overrunning the real economy?
Okay, well, I think it's a very long story, and that it really did just evolve due to unfolding events. I really think that you can trace everything that's happened in this latest crisis all the way back to World War I. In World War I, all the European countries went to war with each other, and they didn't have enough gold to fight the war. So they went off the classical gold standard, they stopped backing their currencies with gold, and they started issuing a lot of paper money to finance the government bonds that they sold to buy war materials. So that was the collapse of the classical gold standard in the First World War, 100 years ago. And that set off a worldwide economic credit bubble that we call the Roaring Twenties. As all of the paper money that was created in World War I and all of the government debt that was issued to finance the war, that created a great boom during the 20s. And they say that was fun, but in 1930, all of that credit couldn't be repaid. And at that point, then the international banking system collapsed and global trade collapsed and the world went into the Great Depression. And it stayed in a depression for 10 years because the policymakers really had no idea what to do. They didn't really do very much about it. And they allowed market forces to reestablish a new market-determined equilibrium in the economy. And that's what happened without very much government intervention. But that equilibrium was at a level of GDP in the United States that was 46% below what it had been in 1929, and at a level of unemployment that ranged from 15 to 25% all during that decade. And during that decade, then the Germans took over Europe, and the Japanese took over Asia, and finally World War II started. And when World War II started, then out of necessity, US government spending increased by 900% just right off the bat. And that huge expansion of government spending into the Depression. But of course, the war then killed 50 or 60 million people. So it was really the necessity of World War II when the government took over absolute complete control over the US economy. They took over all of the production, all of the distribution. They controlled all the prices, and of course they controlled labor, right down to sending people to war, to die. And so there was a complete government takeover of the economy in World War II, and things never went back to anything really resembling capitalism after that. After the war did end, instead of government spending being cut very substantially, what we've seen is that government spending has gone up really steadily, if not radically, if not exponentially, since World War II, starting with the Korean War and then the Vietnam War. So really the government has been managing the economy, in my opinion, really going back at least to World War II. And okay, that was not something that they chose to do, really. It was something that they had to do in order to survive the Nazis and the Japanese. And afterwards, they continued to do that and were ultimately able to defeat the Soviet Union that way. But in order to do that, they've had to really take complete control over the economy to a very considerable extent. And during that process, in 1968, they got to the point where they had to stop backing US dollars with gold because the US didn't have enough gold reserves left anymore. So they broke the link between dollars and gold in 1968, and afterwards we had an absolute explosion of credit. Total credit expanded from $1 trillion in 1964 to now $59 trillion. And it's been that explosion of credit that's been driving economic growth in the last many decades.
Yeah, Richard, well, my question, of course, would be why wouldn't the government have tried to go back to a real economy, management of the economy, rather than pumping enormous amounts of credit into the system? After all, we won the war. We've got a huge industrial capacity, real, with 25% of the output of the world. Why would we have had to resort to extensive credit creation at that point in time? It's understandable during the Depression and during the war, the financing, but why continue that?
Well, they were terrified that after the war ended, that the economy would go back into the Great Depression again if the government stopped spending. So at that point, by the time the war ended, the government debt relative to GDP was really quite high, above 100%. And so what they seem to have done is they allowed the government debt to gradually diminish relative to GDP. But in order to drive the economy, they began to encourage more credit being given to consumers. So consumer credit then began to grow very significantly. And not too much longer after that, then Fannie Mae and Freddie Mac became aggressive in their lending programs, and they issued a lot of debt and bought up a lot of mortgages, and that fueled economic growth in the U.S., especially, say, in the 90s and up until 2007. So one way or the other, they felt that it was necessary to keep the economy growing by expanding debt. Now, part of this, I think, was government policy, and part of it was just the way the market evolved when certain constraints were lifted. Some of it was market evolution, and some of it was government policy.
I see. But the fact is that we had a strong real economy at least until the 80s and 90s, but we allowed, in effect, outsourcing or giving up of our industries during that period, and that would have made it harder to for consumers or workers to pay any of the debts that were being incurred as part of the credit expansion in the U.S. economy. Why did the government encourage that or not stop that or look askance at that and not interfere?
So it's interesting, in the 1960s, during President Johnson administration, the U.S. government was spending a lot of money both overseas on the Vietnam War and domestically through the Great Society programs. And that led to budget deficits, and all of the spending overstimulated the U.S. economy. And that led to the high rates of inflation during the early 70s and up until throughout the 70s. So at that time, we were still on the Bretton Woods system up until 1971. And under that system, trade between countries more or less had to balance. There were automatic adjustment mechanisms that ensured that trade between countries balanced. And so when the US government spent too much money, it overstimulated the US economy, and we quickly got to domestic bottlenecks to the point where we had full industrial capacity and full employment. And so we had wage push inflation, and that led to wage spirals and inflation and double-digit inflation throughout the 70s, which Paul Volcker eventually crushed with very high interest rates. But then President Reagan was elected, and he came in and had even bigger budget deficits than Lyndon Johnson had had. And once again, that caused the US economy to boom. But what changed starting in 1980 is that the United States started tolerating trade deficits. It allowed itself to have trade deficits with other countries. And soon those deficits became very large. So all of the government spending stimulated the US economy, but it didn't lead to high rates of inflation because suddenly we didn't have just a domestic economy anymore. We had a global economy. The trade deficit hit 3.5% of US GDP in the mid-80s. And by 2007, it had grown to 6% of GDP, which was $800 billion in 2006. It was $2 million a minute that the US was going into debt to the rest of the world because of the US trade deficit. So the government was able to stimulate the economy through large budget deficits and through pumping credit into the housing market through Fannie Mae and Freddie Mac. And that pushed up home prices during the 90s and the early part of the 2000s. And the higher home prices allowed the Americans to extract equity from their homes and continue spending more and having a better standard of living in general, even though their wages were flat to declining because globalization was resulting in a deindustrialization of the country. So all the jobs went offshore, but for quite a long time, the standard of living continued to improve, or at least not deteriorate, because Fannie and Freddie were pushing up the home prices and allowing people to take equity out of their homes. And in that way, the economy continued to grow. And as the US economy grew, the global economy grew. But everything stopped in 2008 when we got to the point where the American households had so much debt that they couldn't repay it and started defaulting. And we had a systemic collapse of the financial sector. And it was only then that we would have collapsed back into a new depression again had the government not intervened with trillion-dollar budget deficits every year for several years in a row, financed in large part by paper money creation by the Fed, quantitative easing on $1 trillion scale.
How does this help the American people in the long run when their job prospects are diminished because of the offshoring and, you know, China builds up a massive manufacturing capability and they're doing it with essentially an undervalued currency and just buying American debt, which whether they ever cash in or not would make no difference to them. They'll have the industrial apparatus. What do the Americans do in the long run in the face of this kind of strategy or outcome?
So I think the policy response they put in place after things blew up has been successful in really keeping what was a global bubble. They've managed to keep it inflated. Now, as far as your question about the long run, well, I don't really think there's a lot of focus on the long run when it comes to government policy at this point. I think the philosophy that's guiding policy now and since 2008 is their belief that it's better to die tomorrow than die today. Mm-hmm. And so they have managed to keep the bubble inflated, and they're probably going to continue to try to keep it inflated for as long as they possibly can, and just hope for the best.
But you know there's a limit to this. I mean, you yourself would know that it's an impossibility, or else that means we can get something for nothing forever. So somewhere at the end of this rainbow, there's going to be a day of reckoning for somebody. Your opinion, who would it be that's going to pay the price here?
Yes, I mean, I think that the way things are going, that this, as you say, this can't go on forever. But I do think it could go on for quite a number of years still. I mean, consider Japan. Japan's bubble popped 25 years ago, and they have managed to stay out of depression in large part because every year the Japanese government has had a very large budget deficit. And they've taken Japan's government debt from 60% of Japan's GDP up to 250% of GDP. And they've managed to do this without causing inflation, because when you have a bubble and it pops, it tends toward deflation rather than inflation. And they've been able to finance these very large budget deficits with low interest rates. The yield on the 10-year Japanese government bond is only 50 basis points now. So since the US crisis started in 2008, the government debt has gone up very significantly, but even still, it's only something like 100% of GDP, or just a little bit over 100% of GDP. So the US economy is about $17 trillion in size, a little bit more than that. So what that suggests is that the US government could borrow and spend another $17 trillion that it doesn't have through budget deficits before it even hit 200% government debt to GDP.
Let me just say this, but the Japanese have always been net exporters during this period, so they always have had money to pay the interest on any kind of debt they would incur. We do not have the net exports in our favor. We're negative exporters in effect. So they could tolerate more than we can. They've got a means to pay for it. We have to pay for our deficits with more credit. So it might be a little different for us than them, one thing. And the next thing is, if they issue credit, if we're hollowing out our own manufacturing, where would the credit land to be productive in this country? Since, you know, major industries are gone, the real estate bubble, I mean, there's enough real estate right now to cover the country for the next few years. Where would we spend this extra credit? How would it filter in and realize itself in the real American economy as it's now structured?
Yeah, very good points. On your first point about Japan, you're right, they do have certain advantages that the US doesn't have, their trade surplus. But on the other hand, the US has advantages that Japan doesn't have. The US has the dollar standard. And so when we have a big trade deficit, as we always do, this year it's I think something like $450 billion. Every country's balance of payments has to balance. So when the US has a trade deficit of 450 billion, it will have capital inflows of 450 billion to completely offset that trade deficit. So the way that works in practice is the trade deficit, US trade deficit, results in dollars being thrown off into the global economy and into the trade surplus countries like China. So the Chinese manufacturers sell their goods in the US, they get paid in dollars, they take the dollars back to China, and they'd like to convert these dollars into the local currency, the Chinese yuan. But if they did that in a free market, converted so many dollars, China's trade surplus with the US is about $340 billion last year. Converting so many dollars into yuan would cause the yuan to skyrocket, appreciate so sharply that would kill China's export-led growth and kill their economy. So to prevent the currency there from appreciating, the Chinese central bank prints the equivalent of $340 billion worth of their own currency from thin air, just the way the Fed does through quantitative easing. But when they print their currency, they use it to buy the dollars coming into China at a fixed exchange rate. So the central bank ends up accumulating last year an extra $340 billion roughly, which they then need to reinvest in US dollar assets if they're going to earn any interest on them. So the bigger the trade deficit is, the more money that flows back into the US. And this reinvestment of the holdings of US dollars by the trade surplus central banks ends up financing the budget deficit. So that's an advantage the US has that Japan didn't have. And so far, so good. I mean, we've managed to finance something like $6 trillion of deficits over the last, since 2008. And we have extremely low interest rates. And that seems like that's going to continue into the foreseeable future. We don't have any inflation because globalization is so deflationary. Now, if free trade broke down, or if we had some sort of international conflict with China, and we put up trade barriers against Chinese goods, then suddenly we would have high rates of inflation in the US, and that would make all of this paper money creation impossible. Normally, when a central bank creates a lot of money, it leads to very high rates of inflation. But that hasn't happened because globalization is putting so much downward pressure on global wages, US wages, that is very deflationary. You don't have to hire someone in Michigan and pay that person $200 a day to build a car anymore. You can hire someone in China and pay that person $10 a day. So this is very deflationary. And it's offsetting all of the pressure, the inflationary pressure from the paper money creation, and it's created it's created what I believe is a unique moment in history, where what we've seen over the last 6 years is it is possible for the US government to spend trillions of dollars it doesn't have, and to finance much of that by printing paper money without causing high rates of inflation. So now coming to the second part of your question about where is this new credit going to go, I think to make this sustainable, the sensible approach would be, rather than the US government borrowing and spending a lot of money on too much consumption and on a lot of unnecessary wars around the world, it would be much more sensible for the US government to borrow money and spend it, but spend it by investing it in new industries and new technologies that would probably allow the US economy to grow its way out of this crisis. I'd like to see them invest, over the next 10 years, I'd like to see the government invest $1 trillion in solar energy, $1 trillion in genetic engineering, $1 trillion in biotech, $1 trillion in nanotech, and a few other industries. And that sort of borrowing and spending, it would be like a series of NASA space program investments. And you can just imagine all of the benefits that would pour out of that in terms of new technologies, new innovation, job creation, education expansion.
Why wouldn't that money basically go to China, Germany, and Japan, and Asia to build all that solid product, since they have the capacity now and we don't? So what makes you think that, although the idea makes sense, if American industrial capacity essentially was intact, essentially it's not intact, and essentially that within only 10% of the population is engaged seriously in manufacturing, and everything else is a service, medical or educational processing type industry. And the industries you're talking about are hard investment industries. That product would immediately draw in the world manufacturing capability, which does not exist here.
Well, of course, spending on the sort of scale that we're talking about would have to be planned over a 10-year period. And so part of the money could be invested in universities and training PhDs and advanced degrees so that the Americans could transition into much higher skill set. And then, for instance, the money I'd like to see invested in solar energy, much of that would have to involve laying the solar panels across the United States and then building a grid coast to coast to transmit the electricity through. The current grid doesn't work for solar.
Again, I mean, those industries, the solar panels could be easily made in Asia. The genetic engineering would fill the universities, it's true, but you're talking about the elite part of the American workforce. The bulk of the American people may not necessarily gain from that program, given that it's multinationals who will get all the contracts, and they'll decide where and how they'll invest the money. But over and above that, what if the Chinese finally get big enough, they think, and they're forming investment banks themselves, and they simply use the credit that they have with us to create massive credit on their side, and finally hook up, let's say, with India and Russia, and they become a reserve currency country. Then what does the United States do when it doesn't have a monopoly on credit creation at that point? In effect, they're short-circuited right out of the process that you've talked about.
Well, just one final word on the investment programs I described. That's what I think ideally should be done, but in reality, there's almost no chance of that occurring. So I think that would be a sensible approach, but I have very little hope that anything like that will occur. Now, in terms of China taking over as the country of reserve currency, well, first of all, China's economy is in extreme trouble now. China probably has the biggest economic bubble in the world, and they're going to find it very difficult just to hold things together, I think. But in order to have a reserve currency, you need to get your currency out in the global economy. And to do that, you need to have trade deficits. The US dollar is the reserve currency because we have such massive deficits. Everyone's flooded with dollars. And so people have a lot of dollars to spend, so they spend dollars, and dollars is a global reserve currency. China has a massive global trade surplus. And so if they want their currency to be a reserve currency, first of all, they're going to have to make a little bit more of it available by having a trade deficit, which their economy is not geared to at all. So I don't think there's any chance of China replacing the dollar as the international reserve currency anytime soon.
Well, at this point in time, then, if we're locked into being the reserve currency, we certainly are the military power on the globe to maintain stability, and we certainly are the financial power. All of this doesn't take a lot of people, American people, to do this. Maybe 10% of the population can run this system. What happens to the balance of Americans, especially if we don't have the massive programs you've talked about? Their prospects for an increasing standard of living are not good at all, as far as I can see. Right or wrong?
Right. Yes, the outlook for the American public is very alarming because globalization has resulted in all of the manufacturing jobs being moved offshore. And that has resulted in the unions being more or less decimated. And so the potential, the ability for the working class and the middle class to organize itself to ensure that there are politicians and policies put in place in Washington that benefit the middle class and the working class, those are no longer available because there's no real way for the middle class and the working class to organize itself as it did when there were strong labor unions in the country. So that's why we've seen the shrinking middle class and the median income in the U.S. is still the same. It's roughly the same level now as it was in 1989.
And automation feeds into this in addition. Automation compounds.
That's right. Automation potentially is going to also make far fewer people required on the assembly lines. So we'll have to see what happens. I mean, ultimately, if the economy, if the working people continue to see their standard of living go down, then they may eventually organize themselves and form a third party and put more pressure on the establishment to put in place policies that would be more beneficial to them.
Question is, how would you distribute that taxation power of, let's say, large profits created by credit? How would you distribute it to the population without making it an obvious welfare system? Or is it, this is one of those things that we have to wait and see how it evolves? What do you think?
Yeah, I think we're going to have to wait and see how it evolves. Right now, there's very little indication that that is going to occur. I mean, things are not entirely dire. Over the last 6 years, at least what we've seen with Obamacare, now 20 or 30 million more Americans have health insurance than before. That's a step forward. And also the government is providing, I think over the last 6 years, the government has provided something like $600 billion of student loans that is making it possible for the students, more students to go to university. Now we'll see whether they'll be able to repay that. Maybe one day a lot of that money will just simply be written off. And so it's not all doom and gloom in terms of the outlook for the Americans. I live in Asia. I've lived in Asia most of the last 25 years, and the standard of living in the United States is certainly still far ahead of most of the rest of the world. So the Americans are not suffering too terribly at this stage, but the outlook for them is not very encouraging.
Where would you invest? What would you be doing to protect your future or your children's future, given how you see everything and that you pretty well are the master of seeing it all here?
One good investment is to invest in land and houses. In other words, buy a house on a half an acre of land using a 15-year fixed mortgage, lock it in at near historic low rates of interest over a 15-year period, and rent it out, and the place will nearly pay for itself over 15 years from the rental income. And afterwards, you will have a valuable asset that will generate cash flow for you forever afterwards.
Land in Asia, land in America?
Land in the United States or Canada, just because you have more control over it. In many countries, for instance, I live in Thailand. Foreign people are not allowed to buy land in Thailand.
Richard, thanks for the interview. It was very informative. Your works are fabulous. Everyone should read The New Great Depression.
And sign up for my blog, and you can follow my work that way at richardduncaneconomics.com.
Thank you, Richard. Take care.
Okay, thanks a lot.
Okay, anyway, I'm sorry you had to be subjected to that, but any comments?
Let's say a little something about the Japan thing, how they're able to maintain 250% of GDP as debt, and how Japan differed from the U.S. case.
Because they said they have export, they bring in cash every year. They're net exporters. And they're net exporters. I think they don't have to create the money to pay for their interests. You know, until their exports dry up, then they'll have a problem. But they're geared to export.
And so then what's the Americans' advantage is?
They can print money up to a point.
Debt is the new tool. I mean, Greece is going to go to debt to GDP.
Right.
200%.
Yeah, oh, easy.
So Germany's argument, because Greece's point is like, we want debt reduction. And Germany says, whoa, wait a second. You are not at a place where you need debt reduction. yet, because the cost of servicing the debt is manageable. So basically,
And Germany needs the net exports to Greece and every place else.
it's beyond that. I mean, Germany has,
Sell them submarines.
More on China.
Yeah.
So if China implodes, then Germany will have a problem. But right now, Germany does not have a big issue vis-a-vis Greece. The point I'm trying to make is that, and I hear that also from Greek politicians too, that say, well, the debts are being rolled over. So if I owe you $1 million, you say, okay, Yannick, can you pay the interest on that loan, and we'll roll it over, like. So that's a little bit scary, because it doesn't matter what money you owe, but whether you can pay up the interest.
But it's high. Yeah, it's high.
That is used as an interest extraction
Exactly.
mechanism, and also as an instrument for political coercion, let's say.
And they're going to privatize all the Greek assets in addition to that.
Well, that's where the debt threat goes, because they say, well, if we don't agree to roll over your debt, okay, at profitable interest rates to us, then we're not going to do it, and basically you are liable for the entire principal.
Yeah.
But technically, how it's been working is that the principal is being rolled over.
Thank you.
And basically, you negotiate what the interest rates are going to be. So.
And once the interest rates get kicked up, if they do sooner or later, then
that was what happened in the 2010 crisis in Greece, when the interest rates spiked from 2% to 17%.
Yeah.
And that's really what created the Greek debt crisis. Now, Greece is borrowing at lower rates than other European countries do, because otherwise the debt wouldn't be sustainable. It would be sustainable to say, okay, Greece, you're going to borrow at the market rates. Greece will say, well, I cannot borrow at those rates, so basically you wouldn't be able to roll over the debt. So the debt is being rolled over because the European Union and the Troika, like the IMF and all that, come in and they say, we'll provide the funds, and Greece, you only have to pay us like only 0.5%.
Right.
Interest rates. So.
Well, they're also insisting on open competition in Greece. They're structurally changing Greece. So if Greece is subject to more competition, they may not be able to be more efficient, because they're going to be competing against Northern European efficiency in machine tools and all of that have already embedded there. So the Greeks, being a service economy, have trouble buying.
But the Greeks, not the Greek state, the Greeks have competed because but they have been able to compete because they go off the radar of the
Okay.
So because you have a 30% shadow economy, the Greeks have been able to protect themselves against the bankruptcy of the Greek state.
No, that's clear, but that doesn't help the Greek state and the bulk of the people who can't be in that 30%.
Those that depend on the Greek state, that is dire straits. I agree with you. But and now you can see, for example, today the reports, all the economists were expecting a contraction of the Greek GDP by, let's say, by minus, like, let's say, 0.5%. But actually there was a growth of a quarter.
Yeah, the Greeks bought assets ahead of time for fear of losing money. Yeah, right, exactly.
Not slow turnover assets,
Right.
like land, but they bought like durable goods.
Absolutely. So they pushed up in anticipation of getting their money stolen. They just spent it.
And also, you have money coming out of the mattresses to pay, let's say, tax liabilities.
Yeah.
They say, well, if I will go to the drachma, my
Right, exactly.
So I might as well spend it in fulfilling, like, let's say, my tax liabilities and all that. So that created a spur that nobody expected. So don't underestimate the Greeks in their resilience and survivability.
Anyway, any more questions? I think we kind of covered everything that we can figure out to cover. So,
but I think I'm really alarmed at what, like Richard Duncan said, of where the credit will go. I mean, for me, that's the key issue. For me, it doesn't matter if you print by printing paper money or you issue like electronic like credit lines or things like that. But where do those credit lines? Where does that credit?
well, the multinationals, top 50 or 100, control where business is placed. They'll place it in the most efficacious place for them. There's no coercion on them to put it in any one particular place. That was my point there. This is no guarantee that money under the free trade rules that they have now, that money can be bottled up in any one location. So this is more credit going probably in many other places with cheaper labor. So, go ahead.
How much of that depends on the dollar state and the credit creation?
Yeah, well, it depends on the dollar. Right now he's saying he doesn't foresee the dollar being replaced right away. And so that could probably continue for a while, since the dollar is also buttressed by the fact that you have to buy oil in American dollars. And in effect, oil gives weight to the American currency. He doesn't mention that. That's the effect. You have to buy oil in American dollars. Therefore, you always have to come back to the American dollar. And we enforce that basically at gunpoint. I mean, Iraq tried to sell oil with euros, and you found out where that went, you know. So we'll fight. We have the best military. We'll fight to enforce that. So we probably have a long run as a reserve currency. But we don't have a guarantee that we can keep the jobs in America. Unless there was a refutation of free trade, and it doesn't pay for New York bankers and that group to have a constrained field to play. They make the money everywhere. I mean, they're in Greece. The American banks are indirectly in Greece and all these places. It's a big field to play. In fact, Goldman Sachs helped Greece get into the euro by creating synthetic derivatives to cover up the fact that their budget deficit made it look much smaller than it was, enough to get in. So Goldman Sachs, when they unwound those, made a lot of money. So capital is universal. It doesn't have a national focus necessarily. So the American people, American working middle class, which is privileged people by a lucky break in history. And there's no reason why an American should have any better advantage, an American working class or middle class, but any better advantage than a European or an Asian, especially if he's higher priced. And yes, America is wealthy, because that massive wealth is flowing into America in the New York, Washington, Boston areas, which basically manage the world economy, but they don't need a lot of people to do that. They can do that with 20 million people. They don't need 200 million people, 250 million people to do that.
But why the United States, like Germany, like the same argument doesn't apply?
No, Germany was careful not to let its manufacturing go. They learned through long, bitter lessons that they would be a surplus exporter, and that's how they created jobs. But the United States tacitly allowed Germany and Asia, it was going to be China, then it turned to be Japan. They didn't want to create the circumstances of World War I and World War II over again, which was basically these new people on the block trying to expand and develop with internal growth like the United States did. They said this just leads to everybody going after everybody else's resources. So the United States in 1942, I believe, made a policy decision once they realized, by 42 they realized they were going to win the World War II. With Russia, America in the war, there was enough weight to beat the Germans, but they decided that they would create a three-pole capitalist system and share it out rather than make one nation like England and the United States try to dominate it all. So they have a three-pole system which allowed for more give and flexibility and maneuver. but it didn't necessarily bode well for the American people specifically. Because to spread it out, they had to make the Americans the absorbers of the new production from all around the world with the new equipment and the cheaper labor. So the Americans were just the victim of a historical circumstance which allowed peace. There's been no world war, right? The Germans have got good control over Europe. Europe's not fighting. They're just taking, the jackboot straight on now, So.
They're fighting elsewhere, but Germany and the United States are very advanced countries, very high-skilled, very expensive labor, but the same thing that was applied in the United States, they outsourced. Germany has not.
That's not done that, no.
It hurt itself from the high.
But they were small enough and had a strong enough position as manager of Europe to get that deal from the United States. But it was at the expense of...
I'm looking now, I'm not looking like post-war.
No, even now, the percentage of the GNP in Germany is 22% manufacturing. Ours is 10. They've deliberately kept their apprenticeship programs. They have worker council on their corporations.
Right.
They have a stronger social network because the German people have seen too much strife to be able to buy into, la-la land. American people, with the open frontier, never had that horrible European experience of constant wars and strife. I mean, the Europeans in 100 years lost 100 million dead people. The United States lost 600,000 dead in the same period.
Did you say Germans, though, they don't have excess labor? The United States has excess labor.
Well, they make sure that they don't.
I'm just saying, is it a big factor?
Well, it's a big factor because they deliberately kept their manufacturing. They didn't outsource to great degrees.
One of the big things is outsourcing. Not if you have manufacturing and you have excess labor, you have a problem. If you don't have excess labor.
Well, they're careful to balance that.
I'm just reinforcing.
Yeah.
That's all I'm saying.
But so that's a policy. But it was a policy allowed by us because we take their excess. We don't give anyone else the excess.
I'm just saying, the U.S. made a mistake because we have excess labor.
The United States didn't make a mistake. If you look at it from policy elites in America, this has been a brilliant 100-year run by American policymakers for them.
Right now, do we not have excess labor?
Yeah, so? But that's inevitable.
Problem?
Yeah, it's a problem, but for who?
For us, the United States.
How is it a problem?
Because people aren't working.
Do you think the guys in New York care about that?
I hope so.
I actually do think that a little bit, yes.
Only because
And I don't think it's just New York. I think, and I've worked with them before, I think it is an explosion going on. The United States is not working. It's just a service. And all you would do is the investment bankers, but there's more than just the investment bankers. I do think there's a problem.
If you...
But the argument to that from an American politician is that I'd rather increase my competitiveness by outsourcing labor, okay, and get the same goods cheaper, and then compensate that with like social programs.
But if you don't, but they're not...
To a degree, if you're a manufacturer in the United States, and after a while you outsource, and you went to outsource, and then all of a sudden you have a factory, and you can't do anything, and you go through the whole South, it's empty. It's empty. You go to Texas, it's empty. The only thing you have now is service. You have a problem.
No, you don't have a... It depends on whether you have a problem. Look, if I make a new country, Boston, New York, and Washington, and I look at the wealth created in that area, much of it coming from around the world, and I look at the GNP of that area, I look at the average income of professionals in that area,
So what are we doing?
and all that, and then I take a look at the rest of the country, you'd almost have a Brazil on one hand and a Switzerland on the other hand.
You do have.
Okay?
That's my point. You do have.
Why would Switzerland care about Brazil in
It's
America?
still part of it because it's not Switzerland and it's not Brazil. It's called the U.S.
Do you think you walk down to Wall Street and tell them, look guys, you guys have a big standard of living increase at the expense of the rest of the country. Do you care?
Listen, what happened? They did cut the bonuses, didn't they?
They're making more money now than ever before on average.
Not the bonuses. They are not. They're making more money. They're making more profit.
So-
Companies are making more money. The people are not necessarily.
Well, I doubt that. But the point, it doesn't make any difference. They're not really suffering. I don't see it. I think you see it. You have an apathetic American public. There is no revolutionary sentiment. There is revolutionary. Let's say, there's discontent. Look at the votes for Trump and the attention to Trump. These are protests. They're protesting Trump and Bernie Sanders, for example. But they're not going to end up voting for those people.
No, but why do you think there's such interest in Trump?
Because he seems to be not connected with all the rest of this.
That's right. He's not a Hillary. The reason they're voting for Hillary is because they don't think they accept that the politicians are crooked and deceptive. That's part of being a politician. So it's not so crazy. It's because the American people have said, oh, being a politician, you don't tell the truth anyway. But you actually have to be deceptive to be a good politician. That's the perception. So now you have a Trump coming out just stirring the pot.
Yeah.
I mean, he's just stirring the pot. And that's all he's supposed to be doing. Why do you think that the American people like him?
Because he's entertaining.
Yeah.
No, not because he's entertaining. Absolutely not. It's
He's a good
because
actor.
he's finally telling them what they think.
Yeah.
I bought everybody.
Yeah.
Everybody loves me. 2 years, 3 years, everybody loves me. So when I ask them to come to the wedding, come to the wedding. When I ask them to do this, doesn't matter Democratic, doesn't matter Republican, and that's what the American people think. The people think that the Republicans and Democrats are all in the same pot. They think that they're all bought, and they are. So Trump is saying, you can't buy me. That's the appeal. You can't buy me.
That's why he's not accepting contributions from.
Yeah, that's why he'll go nowhere.
I agree, but what's it?
However, he's making everyone feel good, and all Americans want is a feel-good pill.
Or maybe, maybe.
Look, they said it. They said it all. We don't trust Hillary, but we're going to vote for her anyway.
But why? Why? What do American people think of politicians? Do they think they're trustworthy?
Yeah, but they know that politics is not, angels.
Yeah.
Sunday school,
But that's why they don't care if Hillary is deceptive, because it's part of the deal.
But I mean, there is something that was not being done before and it's being done now. I'm not saying it's going to be like, night and day. But Obama, in major foreign policy, went against the machine. So
Maybe, but America's major foreign policy has not been damaged for 100 years. Even if they went into Iraq and all of this, the net effect is the United States spends 20 times more than its nearest competitor on military. We have 800 bases around the world. We police the whole game. Nobody's going to do anything against us militarily. We make the world safe for finance and trade. That hasn't changed. And if you look at American foreign policy and empire policy from 1900 to 2015, it's absolutely brilliant. There's never been a run of 100 years so dominant and so brilliant. Now, everyone in America doesn't benefit from that. But, that's the price you pay. I mean, can an average American say he deserves more than an average Chinaman? Who the hell is he to say that? All right, so.
But the safety net is much. The safety net is, catches more people in this country than it catches. Sure, not everybody's going to be like, bank jumped, through the roof.